this. Let's get live here as well, and we are good. There we go. Welcome back to another stock market stream. We've got some not so great U.S. factory activity, but we are finally breaking through on the 617, which is pretty important. Take a look at this. We rejected this morning. This morning we lost 617 a few different times. You can see here on the 1 minute, we certainly rejected that 617 line. Even on the 5 minute, you got a rejection here. We got up to within about 20, 30 cents here. Pretty big line. So great to see that we just captured 617. At the end of the day on Friday, we did run up to 619 just in the last couple minutes of trade. So looks like, you had some volatility here in the AM following the Japanese carry trade concerns, but as that volatility is relaxing, as you could see here, we started up about 10 to 12%. What we talked about this morning in the Alpha report was if volatility trends down, which it should after a potential initial institutional reaction to higher VIX, which we saw right here, we should go green. We should be able to go up again. So this so far, the playbook is aligning with what our expectations were in the Alpha report. Again, that because of the carry trade, we would see some form of volatility hit in the first 20 minutes, 15, 20 minutes, which we saw here. And that algorithmic selling is now complete. Coming up to reject 617 was a little bit disappointing that we rejected 617, but nice to see now we're pushing through it. Kind of nice slow slog higher. Kind of expect this to continue through at least December 9th. Let's go take a look at some of these activity reports though. So this morning we got an S&P Global U.S. Manufacturing PMI, and that came in at 52.2 versus the survey of 51.9, so that was good. But let's look at the commentary on that. And then we're also going to look at, let's see here, that was it price and supply pressures unchanged? That's the global read. Let me get the U.S. read here. Just this morning, so U.S. manufacturing, there it is. Okay, perfect. So let's download this puppy and see what we've got, and then we'll go look at the ISM manufacturing read as well. So this is going to be S&P manufacturing for December 1, so 12/1/25. Let's pop that puppy up and see what we got. And one of these is making headlines, obviously, but that's all right. We'll take a look. So we have record rise in warehouse stocks. Now, that's interesting. Rise in inventory, obviously, people are trying to avoid tariffs, right? So I would call this tariff dodging still. Demand growth slides. That's not ideal. So record rise in warehouse stocks could be neutral. Demand obviously down, not great, but confidence improves and employment growth 3-month high. That's very good. This is critical, by the way, for the soft landing. So this right here is critical. Let's see here. We've got operating conditions in U.S. manufacturing sector improved for a 4th successive month in November. Okay. Solid rise in production and further increases in employment were reported as confidence strengthened. That's good. I like to hear that. So very, very good. Further increase in employment. I want to see if that's positive, though. However, current sector performance was limited by a considerable slowdown in demand growth. That's not great. A considerable slowdown, probably because of buildup of inventory. No, it actually here says weak sales. Not great. Unprecedented rise. Inflationary pressures remained historically elevated. This is not a surprise right now. Tariffs are frequently mentioned by panelists, although the degree of pass-through by manufacturers was weaker than in November, with selling price inflation the lowest so far this year. Okay. So the S&P manufacturing for November was slightly down from the previous month. Best rise in output since August, okay. But that builds inventory, right? that builds inventory. However, the success in securing work for both new and existing, okay. However, overall demand growth was modest. Okay. And much slower than seen in October. Well, that's not great. Much slower. Okay, this was especially true in international markets. In some instances, firms noted sales were weaker than expected. So not great, not terrible. Although headline PMI signaled further expansion, the health of the manufacturing sector gets more worrying the more you scratch under the surface. The main impetus came from a strong rise in factory production, but the growth in new inventories, new orders slowed sharply, hinting at a market weakening of demand growth. In short, manufacturers are making more goods, but are often not finding buyers for these products. Warehouses have filled up with unsold stock to a degree not seen since 2007, the buildup here. Unplanned accumulation is usually a precursor to a reduction coming in the coming months. Sure, like if your inventory is full, why would you need to keep building? That's a wild one. However, people are optimistic and manufacturers are optimistic. Well, optimism is cool and all, but we want to actually see sales. So weaker than expected sales in November, not great. Confidence and outlook jumped, again, great on confidence. So hold on, I should be highlighting. Confidence jumped, and then we got the weaker sales. Additional staff were taken on. This is good for the coming months. Overall jobs was the steepest in 3 months for job growth. This is very good. But again, if you're not selling the product, that's going to be short-lived, right? So this right here will say boost in manufacturing jobs will be short-lived if demand doesn't come back. Okay, so that's the S&P survey. Let's try the PMI survey. The ISM manufacturing survey. Let's try that one. You don't want to lose 617. This is a really important line. We rejected it earlier, and now we're losing. It's not great. This is a very important line. This was key this morning in our alpha report as well. The 617 line. We're right there right now, so we'll watch it. Obviously, I definitely want to watch this. Oh, sorry. Okay, put that away. Sorry. I didn't mean to do that. Let's go over here. Let's download the PMIs. Okay, PMIs. ISM. Manufacturing 12/1. I can't believe it's already December. I think you all have already heard me say, though, it's obviously Cyber Monday. We're doing our massive price increase tonight on the Meet Kevin alpha reports, all the courses, the new course that drops. That's all one package, one membership. And then, of course, the Reinvest AI. I was showing a demo this morning in the course member live stream for folks, so people got a little demo. And then a bunch of people who are course members, after they saw the demo, they ended up signing up for the Reinvest AI as well. So that was kind of cool. Remember, the trick is if you're not yet a member, buy the Meet Kevin membership, and then you get a coupon, like a special coupon for the Reinvest AI too. But the net price of all this stuff is going up bigly tomorrow, like 11:59 or whatever tonight. Okay, so what do we have here? Manufacturing PMIs. So these missed on the survey, but I want to see the components here. So what happened? So overall economy expansion, let's see, blah, 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 blah. New orders, yeah, another contraction here. This is the same, they're seeing this here, 3rd month of contraction on new orders. So this is not good. It just basically means we're paying for the inventory buildup now. The GDP pump was a bit fake as companies built up stock to get ahead of most tariff pass-through, right? Because it takes a while for tariff pass-through to occur, and now we're paying the price for that. Backlog of new orders is also in contraction, and employment down on ISM. But what's consistent here is that orders are down, manufacturing activity contracted at a faster pace with pullbacks in deliveries, new orders, and employment. Not great. Okay, looking at manufacturing economy, 58% of the sector contracted, matching the previous month of contraction. Computers and electronics expanded, along with food, beverage, tobacco, and miscellaneous. And everything else seems to have mostly contracted. New orders, let's see what some of the comments are here. Transit times seem to be longer. Okay, institute more permanent tariff. More permanent changes due to tariffs. This includes a reduction of staff. Not great. Let's see here. No major changes. Okay, business soft. Unstable market. Business continues to struggle regarding long-term decisions based on tariffs. Trade confusion. Yeah, I mean, so far, I mean, this seems to be where the poopy-doopy was in the new orders. For every positive comment about new orders, there were 1.2 comments expressing concern about near-term demand. All right, so I like the phrase "not great, not terrible," right? Because you could explain some of this away, and the way you explain it away is you just say, hey, like, this is the expected sell down following you know, what's it called? The build up to get ahead of tariffs, right? Ahead of tariff pass through. That's, I guess, the way I look at these. I can't say that they're, you know, certainly death knells. Like, none of this is like, oh, we're falling off a cliff, right? But it's definitely a continuation of the contraction. And can we get back to 617? Working on 617 on the Qs. Then let's go through and see what some of the goodies are on articles. This morning, by the way, we did a synopsis, fundamental analysis. If you haven't seen it yet as a course member, check that out. You can also check out the stock tab, which is another special feature for course members, and you'll get to see our full fundamental analysis on synopsis, where NVIDIA made an acquisition of $2 billion worth of shares. It's worth seeing because of the, you know, why is NVIDIA buying them? Are they trying to bail out an ally? Is there a fundamental play there? And so we analyze that. Okay, good. So we got ISM up, and let's throw this up. Let's just make a note also sort of on a bottom line on the news tab. ISM and S&P manufacturing reports suggest weakening. New orders. This could be explained by a previous buildup by, you know, the economy to get ahead of tariff pass-through. So could be a near-term speed bump, you know? We'll see if the trend continues, though. Okay, cool. So that's that. Send that through. So that'll be on our data page. Remember, you can get a lot of this stuff for free, like these notes that I make. You can get it for free in the Meet Kevin app. If you download the Meet Kevin app, you'll get this all on the data tab, Apple and Android. All right, so let's see what some news is this morning. Let's see what we got here. So we've got college students who can't do elementary math, right? Biden's IRA is harming cancer patient, disobeying military orders. Let's see. American consumers lose patience with high car prices. Let's take a peek at that. U.S. officials head to Russia after productive meeting with Ukraine. Well, not really, because territory is a big issue here. Office to residential conversions are booming, and New York is the epicenter. Makes sense. Court upholds disqualification of Trump's top prosecutor. We'll look at the Fed commentary. We should be getting our rate cut. And so we'll take a peek at this. What do we have here? America's tariffs jolted the economy. It's AI spending that helped save it. Yeah, there's no doubt about that. Bonds won't protect you from an AI bubble. Okay. All right, let's take a look at these. So, what's going on with cars here? For years, it seems no sticker price was too high for American car buyers, even as the average new car prices have approached $50,000 this year. Those days are coming to an end. Increasingly stretched consumers are starting to draw a line in the sand. Okay. 2025 was supposed to be a banner year fueled by a deregulatory wave and tax cuts. And then now forecasts predict muted to no growth for cars in 2026. Industry had reason for optimism. Cars were in short supply. Blah, 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 blah. What's the forecast? Tensions. There are alarm bells going off. We're relying on the top 20% of households. More customers aren't willing to pull the trigger. Wow, I'm paying $500 a month now. I don't want to pay $700. Dude, car expenses suck, man. Like, there's no reason to have these high car payments. It's very financially bad. Is that correct grammar? Probably not. And the comment section. It's so bad the comment section on the Wall Street Journal won't even load. Okay. But let's take a peek at this. And remember, it's something to keep in mind. We talked about this a little bit on consumer spending. Consumer spending was, held up. Consumer spending on Black Friday held up with year-over-year growth, between 3 to 4%, depending on the measure you look at. But remember the path of this is not an indicator that there won't be a recession, right? And it's not because I'm trying to ask for a recession. I don't want one. But remember the path towards recession, right? So the path towards recession starts with bubble pop, AI, private credit, whatever it is, some shock, right? You start with a shock. Then you start with asset values fall. Margins compress, leading to lower EPS. Then you get job loss. Then you get consumers reduce spending. Then you get more asset value fall. So we haven't really gotten big layoffs yet. This is the question mark where we sit now. Are we at the job loss stage or not? We haven't really gotten to the consumers reduced spending yet. You're starting to see it now in cars, right? Starting to see this in autos now, that rejection. But it's early. So we're still early in that phase. Now, layoffs can come quickly, but not seeing that yet. So I think that helps reconcile this. Okay, what else have we here? Where do we stand on the Fed rate cut? Well, we should be getting it. Position unclear. Powell's going to go for the cut. I think Cook's going to go for the cut as well. Okay, that's cute. Nobody cares about that. We're going to get our cut. All right, what do we have here? Liberation Day, GDP. Let's see here. Annual change in GDP. Let's see. Upward erosion. AI helps the fortunate few. Beyond major AI powers. Consider Taiwan. Blah, blah, blah. Unique case. Okay. Boom in South Korea. Yeah, okay. I mean, whatever. Tariff cliff. What is this? Tariff pains haven't been canceled. They've just been deferred. Okay. Well, we always knew they would take time. 6 to 12 months was always my guess. Companies that paid attention to what Trump said on the campaign trail had been warning about this. Too early to say tariffs have had less impact than feared. I agree with that. Now tariffs have kicked in and the front loading of inventory is dwindling. Right. Well, keep in mind, this is what we saw as well in the S&P. So the S&P piece, pull that here, because it helps put this all together for us. Right here, where was it? I'm missing a picture here. Let me get another picture here of the S&P report. Ah, there it is. This was missing. So this was interesting. You know, this S&P report showed us that warehouses have filled with unsold stock to a degree not previously seen since comparable data were available in 2007. You know, that's a crazy line from the S&P manufacturing report. And it's because new orders are falling and we've built up so much inventory due to tariffs. So, I mean, that's almost a tweetable line, right? Tariff inventories post-tariff buildup at levels not seen since 2007. Yikes. So that would be, yeah, and often not finding buyers, right? So that would be, there we go. So you can follow me on Twitter if you want, at Real Meat Kevin. Inventories post-tariff buildup at levels not seen since 2007. Beam that off. Okay, so that somewhat aligns with this tariff cliff part here. So if I put Wall Street Journal references tariff cliff as deferred, not gone, inventory buildup now done, which likely boosted GDP. What happens next? Right? So, if buyers don't show up, oops. Okay. We need jobs to grow and buyers to show up for this inventory. Otherwise, these measures will contract even more as the lack of new inventory building creates risk if we don't clear it in, December, January. So this reiterates this sort of like Q1 risk, reiterates how important Q1 job growth is for the soft landing. Now we need to clear inventory, need jobs to resume growth, right? There's a lot of pressure on Q1, hate to say it. Okay. Okay. Disinfection. Nice typo, yeah. That leads to lower wages and lower employment. Yeah, it does. Sure, right. I mean, keep in mind what disinflation is, right? Disinflation typically occurs because of
little PP.
Disinflation occurs due to lower pricing power, which, yes, also stalls wage growth. So yes, Scott. I'll put a little note for you in here because downer. There, you get your little shout out on our data tab. Cool. So, let's see here. No comments. Where are the comments in the Wall Street Journal today? I'm disappointed. Okay, what do we have here? U.S. stock market is dominated by companies' AI business. What happens if corporate bonds start becoming AI dominated too? Well, they are starting to. That's always the concern. There might be times when stocks and bonds move together. I think they're talking about corporate bonds. Right, well, of course. Okay, so this is not a surprise. Of course, corporate bonds are going to lose value. Zelensky turns to Europe as Russia awaits new envoy pitch. Yeah, because I think Zelensky's somewhat getting bullied into giving up territory. Many fighting climate change worry they're losing the information war. Oh, no doubt. No doubt. Like right now, climate change is so low on people's priorities. And I hate to say it, like I believe that clean energy is good. Like I just want to be clear about that. Like I don't look at wind farms that are offshore as whale killers. I think solar panels are good. I think these are an inherent good. I think nuclear power is a good. I think EVs, while they have their downsides, are a great thing. You know, your average miles per gallon is like double that of a gas vehicle, right? An internal combustion engine vehicle. So I think those are goods, but nobody gives a flying F about climate change right now because of this shift to the right that we've seen broadly. So it's very unpopular, but that'll come back again. It'll come back. You know, one day you'll see the boom again in green energy. Maybe when Democrats win in 2028, right? Going back for another 617 test here. So we'll see what happens. Let's see here. Somebody says, I think Microsoft and NVIDIA are making a deal. Tom from MySpace says, I have comments for you, Kevin. Thank you, Tom. So I like the little badge. It's at 2 months now. The little badge is sexy, honestly. You got to give Tom credit there. The 2+ badge. Somebody says, my mom is taking some silver to the coin shop 2 hours from her house. She paid $2 an ounce for some of it in 1990. Told her it might hit 60 by the time she gets to the store at this rate. That's a good one, actually. That's funny. Can't wait to hear Kevin's thoughts on him going to LSU. LSU? The kid. I don't get it. Anyway. Car for Coin says, it's a morning. What's up? October layoffs weren't a concern. Oh, are you talking about the Challenger? You mean like Amazon also? Of course. But like companies, layoffs really only matter to the extent that those jobs don't end up getting, those people don't end up finding jobs, right? And they always hit with a lag. Because like, you're not going to, see, you have to remember this. The Amazon layoffs, you get laid off and you get some kind of severance, let's say. You're not going to show up on unemployment, maybe ever, because maybe you go find another job. But if you do show up on unemployment, it's probably going to take 3 months, you know? So those October layoffs probably don't hit until January, February. You know, that's when people are going to file for unemployment if they can't find another job. So hopefully you find another job. But yeah, there is a delay, unfortunately, with when those layoffs will show up in data. All right, the Times is honestly boring. Nothing on the Times today. What the hell? Can that be possible? I feel like the New York Times, usually they got something juicy. Let's see what they put on their heading. Oh, the smell of a newspaper. Few things smell better. Maybe like a new deck of Pokemon cards or like a new video game from GameStop. Oh, dude. I bought a real game for the Nintendo Switch, like one of the old boxes, you know, where you pull off like the seal. It's so nice, and then you like take the little sniff of the edge, and it's like, oh my gosh, the new game smell. Oh, it brings back the memories. And then you pop it open, and there's just like go download it online, and it's like, what the hell? That's not as fun. But oh, that smells nice. Ukrainian civilians captured by Russia, face special terrors. Yeah, that is unfortunate. Zillow quietly removes scores of climate risk from listings. See what I mean? No, everybody's moving to the right on that. So yeah, I mean, there's really nothing on the front page of the Times here. What the hell is this business cover? Man, that's bizarro. This is like, shopping on TikTok is like QVC. The video's app sellers and influencers are driving a rapidly growing shopping model that resembles TV infomercials. Huh. Jeez, man. Don't vertically scroll. I'm telling you, it's gonna dumb you. I actually have a. You may know about this, but I have I do a daily wealth email every day. Yesterday, I made a little oopsie typo. Many of you promptly told me about my typo that I fixed in the app, but I couldn't fix it in the email I sent out. Because you could get the email for free if you want the email version. You just go to meetkevin.com/data. And then it's like a tiny little spot. So meetkevin.com/data, and then you type your email into here and you get the daily wealth email. But anyway, many of you already know this, but on my productivity, so my dailies, I call it, one of my chores every day is to verify to myself that I have not spent time on my iPhone vertically scrolling. And it's a reference to like TikTok, Instagram, or Twitter. Can't do it on the phone. And then of course I'll go on Twitter on the computer. But banning it from my phone is clutch because it's so mind-numbing. Definitely kills time, we know that, but whatever. So what do we have here? Top consultancies. Why is that such a weird word? Consultancies. Let's take a look at this. So the Financial Times here says, top consultancies freeze starting salaries as AI threatens pyramid model. Top consultancies have frozen starting salaries for a third consecutive year as AI starts to reshape the industry. Sure, what do you need consultants for when you could just talk to GPT? I mean, that's offensive to all consultants. I apologize if you're a consultant here. Maybe that's the... that's too generic. Real productivity improvements from AI inside firms, right. So why pay more because of AI disruption? I mean, this makes sense. Firms are seeking more mid-career specialized staff, right? Because the entry-level staff are going to be replaced by the Geminis. It's harder to staff a 23-year-old on those kinds of projects versus someone with experience. Yeah, I agree with that. I do think somebody with experience is very, very valuable, and will be for a while. Back at 617 here, like I look at, I'm just thinking of myself as like the experience that I have. I'm not like looking for a job, but I'm just thinking like startups that have done well, startups that haven't, what works really well at HouseHack or with our AI, where we get a positive ROI on our AI, how to get a positive ROI on hiring or bookkeeping or contracting versus staff employees, right? Like those are experiences that are very hard to just like teach. Sometimes you just have to go through it. And so I could see a consultant who's been through it either themselves or with other companies in maybe their 30s or 40s potentially being more valuable to these companies than somebody who's out of college. That sounds ageist, but I mean there's actual value in what I'm saying, I think. After several years of sluggish revenue growth, consulting firms have been keen to roll out AI internally to boost profits for partners. Right. Yeah. All right. Whatever. Okay. This is the front page of the Financial Times. It tells you, you're not really having a crazy day here. Let's see here. UK Chief Secretary to Treasury Murray. I understand the head of OBR has resigned. OBR chief is resigning. What? OBR Hughes letter. It's in the best interest of OBR resignation for me to resign. So who is this? This is the Office for Budget Responsibility is resigning. Okay, got it. All right, whatever. All right, so let's see here. Bitcoin strategy launches the dollar reserve strategy, right, to pay their dividends. Yeah, because they want to give confidence that they can keep paying dividends in their Ponzi scheme called Stretch and some of these other preferreds. OpenAI takes a stake in Thrive in latest circular deal. Oh yeah, talk circles to me, baby. I mean, you got plenty of this going on right here. Jensen's pumping the that was from this morning. Jensen pumping the investment into Synopsys. Let's see here. Best time to buy quality stocks is now, says the Financial Times. That's cute. How banks fueled the private credit boom. Well, that's the thing. I mean, they're lending to like the Jefferies and these other investment institutions. And there's way less regulation if you lend in that direction. So we'll look at those. We should also look at the information. AWS preps new AI models. Cool. Relations with Anthropic get complicated. That sounds cute. Okay. So, yeah. Let's take a peek at that. Oh boy, oh boy, oh boy. I'm a consultant. AI makes me 10x more productive, not to mention projects I can take without knowing anything about it by teaming or learning with AI. Yeah, I mean, I guess it could also accelerate your ability to understand other people's goods and services. So for example, let's say you're a consultant who's really experienced in handling layoffs, let's say, or handling hiring, in the inverse. But you don't understand what a company actually does. AI can maybe teach you and give you a head start. I think that's reasonable. That sounds fair. Somebody says, what about the auto industry? Do you think it's on the verge of failing? Well, we were just talking about autos with the cover of the Wall Street Journal. And yeah, somebody says, did you see the Tesla calls? What are you talking about? Real Estate Frank? I didn't see it. But yeah, that makes sense. We talked about the Bank of Japan. We talked about autos. Yeah, I mean, auto prices are just ridiculous. I don't think the auto industry is going to fail, but I do think the auto industry is in a recession. There's almost no question there. It's a very difficult industry to see growth in autos right now. It's one of the things that contributes to Tesla's valuation being so high because, forecasts for vehicle growth are so low right now. All right, so what do we have here? There's a lot of Amazon, frenzy, blah, blah, blah. That hasn't gone to plan over the last couple of years. Okay, what's going on with Anthropic? Bedrock, that makes models from Anthropic, has faced repeated technical challenges, delayed rollouts, and Anthropic is partnering with Microsoft and Google. None of the setbacks seem to have seriously hurt AWS. Older AWS services, like servers and databases, are still growing, an overlooked fact amid much of the hype. Despite that, AWS itself will almost certainly shout from rafters this week about progress that the AI is making at its conference, reInvent conference. Oh, that's kind of cool how they put the little colon in there. We could probably do that with reinvest. That's interesting. Okay, anyway. Okay. New models, blah, blah, blah. Bedrock Agent Core. Yeah, I read somewhere that I guess agent shopping has skyrocketed this Black Friday. All right, back to 617. Good. This is what we want. We want to hold that 617 here. All right, that's boring. Nothing new there. All right, what else on the FT? So on the FT, we've got, we'll talk about strategy in just a moment. What's this in Thrive? OpenAI has taken a stake in Thrive, a private equity group set up by one of its biggest investors. They will take a share in Thrive Capital, who's run by Josh Kushner. Who the hell's Josh Kushner? Is he related to Jared Kushner? Josh Kushner. He is the founder of Thrive, youngest son of Charles Kushner and the younger brother of Jared. 4-year younger brother of Jared. I see. 4-year younger brother of Jared. Got it. Yeah, so it's basically Trump. Thrive Capital invested more than $1 billion into OpenAI. Yo, what the hell is this? Thrive invested $1 billion into OpenAI, and OpenAI is investing into Thrive? What? They're just giving their money back. What the hell? What? Why? Financial terms were not disclosed. OpenAI was granted a meaningful stake in the business in exchange for giving companies it owns access to GPT's products. What? Thrive does not own a direct stake in Thrive Holdings. but set up the company. This is weird, man. Whatever, dude. Whatever. This is a full circle jerk. This is weird. Yeah, it is like the meme, the $20, I know. Amid fears of an artificial intelligence-led boom, many investors are feeling trapped between optimists who say high valuations make sense and pessimists who say this time is no different. The trap feels like there's a lack of good options. Well, I think that's why we keep seeing these six-figure inflows into people investing in house hack. You know, I'm not trying to shill it. You know, this is not a solicitation. It's risk with investing. Read the offering circular at househack.com. But, I mean, really, like, if the house hack AI play takes off, you're really able to still right now invest in the company at like a very basic real estate valuation from August 2024. That's when we got our valuation of $1.40 to $2 a share. We have not had a new valuation since then. You know, the company's G&A is way lower. The company's revenues are way higher. And we have the AI product now. Like, the company has transformed since our $1.40, like, and the current raise is at the low end of that $1.40 to $2. So, like, house hack is this dirt cheap play, in my opinion, that's not only hedged by real estate, but has upside on AI. So you're paying a dirt cheap valuation, in my opinion, based on what I've just described, you know, for shares in the company, which I think is awesome. And this is why when I see people talk about like, oh, there are no good things to invest in right now, at least that's why in part I'm putting my money and investing more into house hack, because I'm like, dude, it makes sense. Anyway, there is a once-in-a-generation opportunity in global markets that could deliver strong returns regardless of how the AI mania plays out. The opportunities in quality stocks. Oh, that reminds me, I want to do that 401k thing. I'm going to make a quick little 401k note. Boom. Dude, make sure that's good. All right, the opportunities in quality stock, particularly those trading at inexpensive prices. Then we've got characterized by high returns. Fine. Worldwide, only 1 in 5 stocks makes the cut. Okay, for that reason, quality stocks are often expensively valued, but that's not the case today. Well, if you look at Meta, you know, Meta's at like a 1.2 peg right now, right? Quality has just suffered one of the worst relative declines ever. Well, how are they tracking this? Are they using a particular index or what? Like, give us some names here. Presence of names like Alphabet and Microsoft did not stop the names of quality stocks from falling. MSCI standard. Okay. The result of a list of 400 high quality stocks trading for good valuations, including 140 in the US. Top 30 in each category include Lockheed Martin, CVS Health, Tesco, AstraZeneca, Lenovo, First Rand. Okay. Where do they have the full list? Can I find the full list here? Quality. MSCI quality. Here it is. Quality stocks. Let's see if I can find like an MSCI quality index or something. Not easily. All right, whatever. Okay, interesting. Yeah, I do think that there are cheap opportunities out there. I think Meta's on that list too. And I mean, as we saw some of the names here. Maybe the comments will have some extra names. Let's go look. Somebody here writes, something's going on. There's a whole bunch of Mag 7, Palantir, AMD, and other short leverage ETFs just released in the past 30 days. There are no coincidences. Yeah, post the list, you clown. Let's go, dude. Let's go. That's exactly what I felt. Let's go. This guy, Top G right here. W comment no cap. There, we got to get the Gen Z in there, you know. Here we go. Doge, Sheeb, Pepe, Bonk, Floppy. Jackass. Search for quality factor ETF brings up the iShares Edge MSCI World Quality ETF. Nvidia, Apple, Microsoft, Visa, Meta. I'm telling you, man, look at the stock app. So if we go to the stock tab right now and we look at Meta, Netflix, here, I'll give you a quick little peek because we did a big analysis this morning on Synopsys. Oh my god, this to load. So this is in the stock app. This is just for course members. We have like a big analysis here in Synopsys. But anyway, at the top, I got Netflix at 1.97, and Meta's only at a 1.25 peg right now. Like, that's a dirt cheap peg. So, like, you know, those two, Meta's been on a downtrend, back to 108 right here. Netflix has been on a downtrend, and Meta has recently had a little bit of a leg down too. Both of those are really relatively cheap out of the Mag 7s, whereas Tesla's very expensive. But this is good right now, breaking out of the 617, so I like seeing this. This is very good in the short term here. Okay. Somebody's bringing up Dan Ives. Well, you have to remember Dan Ives. He's basically the paid shill for Wedbush, right? To keep their clients invested. So you're paid to keep clients invested, essentially. So you know, you can't be bearish. As soon as you go bearish, your clients want to sell, and you don't want your clients to sell. What's going on over here? We've got how banks fueled the private credit boom. Right. I mean, can we just go here for a moment? I'll read and I'll put the okay. After the implosion of the auto parts group First Brand, subprime car lender Tricolor, 3 private credit executives appeared last month in front of a UK House of Lords committee to hit back at misinformation. Oh, okay. Somebody says, bro, Shopify is down. I can't do my job. Is that true? Shopify down? That sucks. New Dear Colleague letter from Jeffries. They need a handful of okay, okay. Hakeem Jeffries, not Jeffries, the private credit situation. Anyway, what's happening in private credit is fundamentally safer to happen in private credit than the older balance sheets of banks, says Blackstone. Oh, okay. Blackstone is saying, guys, don't worry. It's safer that the leverage is at private credit versus big banks, because big banks could be a single point of failure. Right. Banks disagree. Jamie Dimon referred to a huge arbitrage taking place where you're moving from the banking sector into lightly regulated rivals. Mm-hmm. The two have intertwined fates, though, because banks have lent to them. I agree. The IMF has warned last month that the ground is shifting. Yeah, that could be the bubble that pops everything and moves us into recession. This was the problem in 2008. We got the end of the possible in the banking system. Okay. The ties in non-bank lending. Yeah, this is a great, fantastic way to show the picture of it, honestly. Banks provide leverage to private credit funds in 3 ways. Upstream to investors backed by existing stakes, sure, by going public. Midstream through SPVs to go into companies. Or investments into the underlying companies, right? Investor financing, let's see here, limited partner, blah, 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 blah. Okay, bank leverage, we get it. NAV loans, fine. It's all a big circle jerk, we get it. All right, anything towards the bottom here? CLOs, $1.5 trillion market. How healthy are they? IMF estimated that almost half of the borrowers have negative free operating cash flow. So funds have found other ways because of payments in kind, right? Yeah, here, payments in kind. And those are increasing the usage of payments in kind. Yeah, it's actually a good little breakdown. It's a little complicated how they're talking. I mean, round tripping here, using leverage for transactions, round tripping fears. Is risk truly shifted out of the banking system? No, not really. especially if you're taking payments in kind. Yeah, it's a good article. I mean, it's really just a way of saying that when poop hits the fan, it could also take the banks down. Nobody wants to hear that, but whatever. So let's see here. Okay. All right. So, quick shout out, by the way, to those of you taking advantage of the Cyber Monday sale. I just want to shout you out here. Josiah, welcome. Thanks for joining Reinvest AI. Lucas, thanks for joining Reinvest AI. That's 11 minutes ago, 12 minutes ago. Karthik, thanks for joining the Meet Kevin membership. I probably butchered your name. I apologize. Oh, Josiah is smart. Josiah bought the Meet Kevin membership 22 minutes ago, got the course member coupon code, and then 10 minutes later bought Reinvest AI. Maybe you saw the demo in the course member live stream. Let's go. Let's go. Smart. Jeffrey bought Reinvest AI. John Toon bought the Meet Kevin membership. ARV. This is some LLC bought Reinvest AI. Yeah, get your tax write-off. Smart. Adam bought Reinvest AI. Richard bought Reinvest AI. Himanshu, what's up? Reinvest AI. Adam, Reinvest AI. Sammy, Reinvest AI. Ignacio, Reinvest AI. Hugo, Reinvest AI. Welcome aboard. Nice. So thanks for joining. What do we got here? Kevin, UiPath has been on a tear this past week. Earnings this Wednesday. What is your take on their new product, cloud-based platform for orchestrating automation? Yeah, so something to know about Path is, you know, they were AI before AI, right? But the problem is, because AI came out, they got dumped. You know, they had a high valuation in the bubble of 21, and they've never really recovered. Now, volume is rising recently here. It's creating enthusiasm again because you're coming off the low of $9. You're at $14, right? So there's a lot of hope for this stock to finally take off again. The problem is they've had to sort of reposition from an automation play before AI to now there's AI and there's so much competition. So I feel like they have relatively weak pricing power. And so it's hard to bet on a new product until you actually see it show up. So I don't know, but what I'll do is I'll go to their last earnings. And if they have earnings coming up, that's great. I'll tell you what to look for. So in my opinion, what you have to do is you go to their last financial statement. Let me just write in UI Path 10Q 12/1/25. And so what I'm gonna do is pop this 10Q open. Sorry, I always tab away. If I don't label it and save it in a folder, I'll never save it. So I save all my research in the same folder. And it's synced between all my computers, iPads, and phones. So all my research is always with me, right? And then when I'm researching wherever I am, it always goes to the same place, which is nice. You should do the same. But anyway, let's start at their cash flow statement. So if I look at cash flow, it looks like they're repurchasing shares, which is nice. We are actually producing cash flow. So we are cash flow positive and buying back shares. Positive and buying back shares. I've got free cash flows here of about 70 mil per quarter of free cash flow, which is nice. But let's see what their business is doing. And so their margins will tell us a little bit about their pricing power, right? So here you go. Gross profit, 297 divided by 297 divided by 361. I have a gross profit of 82.27% versus last year. My profit margin was 252.9 divided by 316.2. That's actually good. It's growing. This is good. Growing PP, very good, very good. I like to see that. So their margin's going up. I've got revenues. So that's right here. I have revenues that are growing. See, this is what happens when you donate $20 to me. I just have to be clear, this is not paid personalized advice, okay? I'm looking at a public filing here. Don't sue me, bro. You've got a 14.2% increase in total revenue, and I've got OPEX that actually shrunk. Let's go, dude. Look at that. Shrinking OPEX. Let's go. Now, we're technically operating at a loss, but we do have interest income that brought us positive. Their sales and marketing is down, and so is their G&A. So this is a business that's cleaning up. They're cleaning house, okay? So here's what's going on at UiPath. 1, stock and toilet. Okay, 2, 70 mil per quarter of free cash flow. 3, OPEX down. Great, cleaning house. Okay. 4, pricing power expanding. 5, revenues expanding in the face of lower ad spend and AI competition fears, right? AI competition fears. 6, margins expand. Oh, well, that's part of this. Pricing power expanding through margins expanding. And then the valuation is hard to pin. Valuation hard to pin due to barely positive EPS, but I'll try. So I'll do it for you. Man, I'm like a slut for those $20 today. Thank you. I appreciate it. So I'm gonna make sure you get really well taken care of today. So what do we have? I just want to see their forecast EPS so I can see what Wall Street has for them, and then I can make my own determination on top of it. Gotta love being on top. So I've got 66 cents of EPS for Jan 26. I have forecast growth is low, dude. Balls low. 12.5, 8.3, 9.5, 17.5. EPS growth here is very low on expectations. So 12% per year average expected growth, very low. So the market is not giving them a lot of growth. That puts them at a valuation right now of 14 divided by 0.66, 21 PE for Jan 26 divided by 12. This is a 1.6 or 1.76 peg. This is low, bro. So on a 4x4 or a 2x2 foundation, I have low momentum, increasing pricing power, low valuation, and balance sheet. The balance sheet's gonna be fine, dude. This is good. I actually agree with you. Like, I wanted to shit on this, but I can't. This is good. Cash, what's my current debt? Payables, oh my God, this is good, dude. Total debt, nothing, dude, nothing, bro. No debt, plenty of cash in the bank. Bro, this is a good one. Like, this is good. Great balance sheet. The 2x2, like the Rust 2x2, says this is a buy on all metrics. On all metrics I have. So yeah, dude, I like it. I like it. You know, this is I mean, you donated $20 for me to look at something that I actually like. So yeah, thank you. That's hot. Good for you. Thank you. Very nice. So when are earnings? Earnings are in 2 days. Well, tanks could be a buying op, eh? But you know what to look for now. But anyway, what's going on over here? What? Dude, look at that rejection on Tesla, bro. That was in the alpha report this morning. I'm like, boys and girls, 617 on the Qs and 433.99 on Tesla. Holy crap, bro. Look at that. It's perfect. It's perfect. Oh, my Lord. Oh, the alpha report. The alpha report's printing again. This morning, I said it. When the market was red, I'm like, boys and girls, Literally, if you watch my course member live stream this morning, if you go join the Meet Kevin membership, you will see me before the market opened up saying, listen, vol's up because of the Japanese carry trade. It's bullshit. It's usually a buy the dip. I literally said, expect volatility within the first 15 minutes. That's because the algos are responding to the VIX. Then the VIX is going to go down. From 10%, it's going to shrink. And as the VIX goes down, the Qs will go up. You watch my course member live stream this morning, I call it. I'm like, the VIX is at positive 10. It's going to trend down. Look at it. It's only a positive 2 right now. Okay? And so what's happening? Q's up, baby. Come on, guys. Easy game. Easy game. You can have that in the Alpha Report every single day, along with fundamental analysis, like what we just did on Path. We do that kind of shit every day. And you get it straight, no bull crap, right here, meetkevin.com. You pay once, you get the Meet Kevin membership for life. Keep in mind, tonight, we're also dropping the Reinvest course, which is included in your membership. So you get that for free. A bunch of new lectures. I'm actually adding some more later this afternoon. And then this comes out at 11 o'clock tonight. I'm launching the course. So this will be really exciting. We're calling it the Reinvest course. And then you get all the other courses as well. The Reinvest course is really just like picking up where the others have left off and updated information. So it's not to replace the other courses. It's, I mean, I think the value for what you get here for the money is insane. You know, what a better day than to utilize the Black Friday / Cyber Monday sale that ends tonight at 11:59 p.m. All right, so that was fun. I like that analysis on UiPath. Whoever gave me the $20, thank you. Like, I feel like I owe you the $20 back. I'm keeping it, though. I'm going to go spend it on Legos. You know what I'm going to do? I'm going to spend your $20 right now. Let's go spend it together. How about that? So, this morning, I did a little test, and I bought a little bit of Lego Duplo for my 2-year-olds, and they absolutely loved it. So we're going to go buy some Duplo right now with your $20. And how about, oh, this is perfect. Absolutely perfect. Here's what we're going to buy. I'm going to show you what we're going to buy. Okay, you ready for this? Dude, the kids, especially my little boy Jay, he's going to go ape for this. Look at this right here. Lego Disney Pixar Mac at the Race Cars Toys. Pixar Toys, whatever. Okay, it's $19.99. I'll cover the YouTube cut. And you know what? Just because I'm feeling generous to my children today, I'm gonna throw in the I call it the bugger, because that's like the German way to say it. And I'm also getting manipulated by the overnight shipping that's free with $25. So I'm going to throw in the tractor, the bugger, excavator, and then the Mack truck. So thank you for your $20. So basically, your $20 just bought that McQueen car for my kids. You know, I had to work for it. I had to do the UiPath analysis, right? So I don't feel bad about that. And now we're going to go buy those Duplos for my 5 little babies. So thank you. All right. Very good. Do you have 2 sets of twins? I have a set of identical twins, and it's a little complicated. The identical twins are part of the triplet bunch, and then I have non-identical twins. So technically that's 2 sets of twins, but one of them are identical, and it's very difficult right now because they look so similar. I confuse them all the time. It's kind of sad. I got to work on that. Anyway, we had a little bit of sell-off here in Hood, trying to rebound a bit. Wow, we got down to 118, huh? I know a lot of people are leveraged to the titties on that one. Look at that rejection, perfectly on my line. Within 1 penny of my line on Netflix there. All right, I'm going to strengthen this line on Tesla. 433.63. Honestly, it deserves moving from green to blue now. So we're going to make that a thicker blue line. That's proven itself a lot. The Netflix line, this shouldn't be a trash line anymore. This has proven itself enough. Let's make it a green line. Let's upgrade that. And so Tesla registrations up in Italy. Bro, what did they go from 5 to 9? Like, you got to know how many cars they sold in Italy. You know? Like, the percent doesn't matter. So very good. Still, as volatility is coming down, Qs are slowly moving up. This is consistent with what we expect for a rally through December 9th. Mostly because we are looking for, what's it called? I think the hawkish cut. I think we're going to get our cut, but it's going to be hawkish. So keep that in mind. Thanks, William, for joining Reinvest AI. Thanks, Kevin, for joining the Meet Kevin membership. What's up? Sammy, Omar, welcome aboard. Y'all just joined within the last 10 minutes here. Thank you so much for joining. Ooh, this is good soft landing from The Economist. Oh, this could be sexy, boys and girls. Look at this. Why worries about American job losses are overstated. Oh, shut up the bears. Oh, hello, Economist. Everyone is gloomy about America's job market. Yeah, no shit. Because have you looked at 27 weeks unemployed? Investors talk about a K-shaped economy in which growth is buoyed by an exuberant stock market, blah, blah, blah. Okay, fine. Risk management cuts. American workers have had a hell of a run. Somebody's asking, why are twins with in vitro so common? Because when you do in vitro, the odds of an egg splitting increase 10%. Or I think it increases to 10%. I'm not sure about that. I guess I should fact check if it's a 10% greater chance or 10% likely. I think it's 10% likely. So yeah, in vitro fertilization increases the risk of egg splitting. That's how you ended up with Octomom. Although she also put a lot of babies in, but then you have splitsies. For almost a decade, what is this? Wages have surged, blah, blah, blah. Okay. Why then the fears of a jobs apocalypse? The case for concern has three parts. First, there have been no disasters yet. Things are moving in the wrong direction. Right. Job openings have edged down. Unemployment is creeping up. The concern is, since the employment has a tendency to grow slowly and crash quickly, correct? Once the threshold is reached, past experience suggests the downward spiral sets in. Correct. A second worry is that whatever the official figures suggest, firms seem to be shedding workers. The layoff announcements, right? Challenger and Gray and Christmas, right. And the final reason for concern is consumer confidence and the surveys. But there are counter arguments. 4.4% unemployment is not high. True. It has been higher nearly 3/4 of the time since 1948. That is true. This is very true. They're going to probably talk about the break even for unemployment as well. Layoff announcements tend to run about 2 months ahead of actual jobless claims. Hey! If you were on the live stream like 45 minutes ago, what did I say? I think at the beginning of this live stream, I said it takes a few months for layoffs to show up. Economy has some buffers. SOM rule hasn't triggered yet. Okay, we know that. No good reason for jobs to collapse. GDP growth is on track. The nowcast is up. Stock market has been soaring, right? Wage growth too is solid. It's not collapsing. It's not skyrocketing. This is true. Trumpian uncertainty, the tariff rollout, but that's also chilling out. Less of a frenzied 2026 could be a good reason for calm in 26. Yeah, I agree. Yeah, I don't think they're. I mean, this is not like a like screaming bull case for jobs, but those are valid counter arguments. I think this is valid. I need to get some food. I'm gonna pass out. I haven't eaten in a while. So, what should I get? I don't know, honestly, even like a piece of bread, but I need some food. Kevin's blood sugar is dropping, and I'm going to pass out. I think my fast app. Oh my God, it's been 21 hours and 44 minutes. All right, I'm going to stop that right now. I need to take a bite. That's bad. It's been too long since I've had food, and I'm going to die. So hold on one sec.
Are you effectively
Taylor
easing?
Riggs.
They will be easing. That's the, well, you can
You
answer
have
that.
some very strange dreams. That's a
I don't know how the
detailed
fight ended in my
and
dream,
dirty
Dagan,
dream.
but we're here together.
I hope it ended like a sword fight or something. Dreams are supposed to be more interesting than that.
Well, you can answer that.
So the very short answer is it depends. It depends on some other things that are happening within money markets, whether or not the money multiplier is actually causing overall liquidity to go up or down. But at the end of the day, even if you just have relatively low levels of economic growth, they have to restart QE in the coming months. It's just there's no other way to do it because of this framework they've built.
They have to
More
start
juice.
QE.
Let's take a look at juice in the equity markets today.
Oh my gosh. Yeah, I get lightheaded and like jittery if my blood sugar's too low. I also feel like the hot flashes too. Everything goes to shit if your blood sugar drops all of a sudden. Well, it's not good. But this should help soon.
Tie-up that allows NVIDIA maybe greater control over its supply chain. The overall stake is about 2.5% in this company. Dagan, I know you've talked about the circle of death, the circle of all investments in each other.
Couldn't it be a circle of life?
Yeah, I don't.
Circle of life.
What
I don't
about a
call it.
circle of
I don't
life?
call it the circle of death. I think that the mainstream media gets it wrong because they're trying to paint it as some sort of Kamala Harris like Venn diagram where they put these diagrams together that they all need one another. That NVIDIA needs the Amazon Web Services and Microsoft and they all need things that they each have.
Cool.
But it just makes the powerful become more powerful.
Right. I want to hear them talk about the QE again.
I just think that.
Get my blueberries in here. Get some. I'm gonna ask Lauren for some eggs too.
Death. It's just they need each other.
Yeah.
Coming up, the big, beautiful bill is now law. New York requirements for food stamps take effect today. We are diving into the impact live from Capitol Hill. It's next.
I started singing bye bye Miss American Pie. Drove my Chevy to the levee, but the
Lauren's gonna give me some eggs too. All right, sorry about that. A little detour there. But yeah, I mean, I guess I could drink some Gatorade or whatever, but I don't have any Gatorade handy. So the blueberries will have to do until I get some eggs and protein. All right, so that was a good piece by The Economist. I mean, it's okay. It's relatively generic, but it's good. So let's see here. So somebody writes, I'm a newbie to stocks, been watching you for a while. It's probably a stupid question, but what's the best platform to buy stocks? You know, honestly, like the easiest is probably Robinhood. It's a really great platform. You could also buy if you wanted through like SoFi or M1 Finance, right? This one right here is Webull. I do have an affiliate link for this one, just full transparency, meetkevin.com/Webull. I like this one just because I like the lines, right? And so what some people do is they go to like meetkevin.com/Webull. Let's see what their promo is right now. So if I go to meetkevin.com/Webull, so right now it's a 2% deposit match if you sign up. That's actually pretty good, 2% match. Yeah, you send $2 million over, you get 40 grand. That's great. Oh, very good. But anyway, yeah, so, anyway, what am I trying to say? Oh, yeah, and then people copy my lines, which is fine. I encourage it, you know? So, the breakout, still holding. Somebody just hit the sell button on the Qs. NVIDIA has finally a nice little move back to 180. That's good. Netflix, cool. Meta, what do we got over here? $20 on Rocket Mortgage. How are the consumer plays doing today? Because the consumer spending is holding up. Six Flags holding up, 72 bips. How's Play? I've got Plays moving up again. This is like the 6th day in a row now, 6th or 7th day in a row. So really nice recovery here on Play. What's this? Politico. Whatever. All right, so what do we have here? Okay, Larry Fink, tokenization, finance. Yeah, we know. When LLMs learn to take shortcuts, they become evil. That's cute. All right. Corruption scandal. Cost Zelensky is top aide. Yes, we know. Self-driving taxi revolution begins. Investors expect AI use to soar. That's not happening. Oh, that's a sexy title. Now that's provocative. Oh, I'll take a look at that. Investors expect. Oh, look at that. This is a cute little. Oh, why is he red, or she? I guess I don't know. That person's sleeping. So some people are not productive. Laptop closed. Okay. All right. So what do we got here? November 20th, American statisticians released a survey buried in the data where the implications for trillions of dollars of spending. Researchers at the Census Bureau ask if they have used any artificial intelligence in producing goods and services in the past 2 weeks. Recently, a survey indicated that only 11% do. Adoption has fallen sharply over at the largest businesses. Fallen? 3 years into the AI wave, and demand for the technology looks surprisingly flimsy. Well, that's not good. I love it. I've been using Gemini now for a while. I should honestly use it for like my daily wealth and stuff, but I don't. And that's how I made a typo yesterday. Hold on. Sorry, forgive me. I'm already feeling a little better, but I think it's going to take a little longer for, that could be psychological, for it to actually, it's going to take a little longer for the, 20 minutes maybe for the blue areas to hit my blood? Anyway, whether AI adoption is fast or slow has profound consequences. For the world to reap productivity gains from AI, normal business users must incorporate it into their day-to-day operations. It's also important determining whether or not the world is an AI bubble. From today until 2030, big tech firms will spend $5 trillion on infrastructure to supply AI services. From today until 2030, yes. Okay, geez, $5 trillion. To make those investments worthwhile, they will need $650 billion in AI revenues. We've already seen this article, or that argument many times. Census Bureau is just one source of data. I think the number is actually much higher than this. But that is interesting, this little like stagnation that you're getting here in the survey. Like it should be continuing to go up. Because I think they're definitely under-reporting here, the Census Bureau. But it should certainly be going up much more than this. Okay, asking employees about their own use at work might elicit more positive responses than asking managers. Right, exactly. Unofficial surveys point to 37% of using Gen AI. Others say it's, that's interesting. Here's one that's down. So a Stanford University survey sits at 37% using AI, down from 46. Oh, let's go. Thank you so much. All right, look what we got here, boys and girls. These are, first of all, this is like a 99-cent plate from Target. We don't spend money on bullcrap. Sorry to those of you who have fancy plates. But this is a nice little tray of salt and peppered hard-boiled eggs. Nothing like dietary cholesterol, which apparently has no bearing on your actual blood cholesterol longer term. Eggs are actually good for you. Imagine that. All right, well, I'm going to eat those for a checkup. Let's listen to CNBC and then we'll come back to that article.
Performance, which is pretty stark on that Snowflake. Salesforce beating out Snowflake. Did I say something different? Maybe I misspoke. Jason, you have Snowflake, right?
Yeah, it's been a phenomenal performer. You see it's up 63% year to date. So data warehousing has been the story. I think they continue to create new AI tools that I think is going to be positive for the stock. Operation margins have been growing. What I'm watching for here is product revenue. Revenue is going to be...
Did he just say operation margins? That's a good one. You got the CNBC jitters.
Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. It's time for today's drill down where we focus on one ETF. Eric, what do you got?
Katie, today we're looking at an active municipal bond ETF called the NLI McKay California Muni Intermediate ETF. So again, this is like a classic bond manager who's out there picking muni bonds that are from California and trying to outperform a benchmark, right? So 36 basis points of a fee. Again, that's pretty good considering it's active. It's going to be lower than most mutual funds. And it has 64 million in assets. Let's look at the holdings here. Again, for most of us, we're not really that familiar with all of these different munis, but you're going to see California. There's University of California, a lot of Cali and Cali cities in there. These are the 108 bonds they picked. Interesting, though, most of the benchmarks have 1,300, so very concentrated, which is good because it gives you a chance to outperform. Let's look at the performance of this versus the BlackRock California Muni and also the MUB, which is just the broad muni. And you can see this is outperforming over the past 3 years. And it's interesting, you can see how much money you get from the yield. See, that's the price change isn't much. Throw the yield in there, but this is...
Look at this guy shilling this hard, huh? I wonder how much I got paid to shill that. Jeez. Hardcore shill there. All right. So, that was very good. Devoured those eggs. That's like 250 calories of eggs. That and the blueberries in 20 minutes, we'll be fine. Not dying today. Knock on wood. I think probably the worst part about low blood pressure is if you get up and then pass out, you hit your head and then die. You die from hitting your head, not from the low blood sugar. Anyway, Ramp, a fintech firm, finds that in 2025, AI use soared to 40% before leveling off. Right. This should be 100%, honestly. Everybody should, to some extent, use AI. There's some things you don't want to use AI in. Like, I like my little... I'm not trying to shill it. It's free anyway. The Daily Wealth. I like the Daily Wealth email because it's purposefully not AI. Like, I don't even use it to ideate or whatever. It's just, it comes from me, the heart and soul. And I feel like that's actually becoming more rare nowadays. Like, if you look on X, I feel like 90% of the crap people post is all AI written. It's crazy. Economic uncertainty, heightened by trade wars, falling migration, blah, blah, blah. How does economic uncertainty have anything to do with less AI adoption? Technology tends to spread in fits and starts. Could be less benign explanations. One relates to power dynamics. Almost everyone sings the praises of AI. In recent calls, everybody's pitching blah, blah, blah. Okay. Let's see here. Challenging perceptions of usefulness could be another reason for the adoption stagnation. Evidence is mounting that the current generations of models are not able to transform the productivity of most firms. I mean, I think it, like, practically at everyone's individual, like, at everyone's desk, AI can be a tool that makes you, 10 to 20% more effective or maybe fast. But, is that going to increase revenue at the firms? Maybe. I suppose it has the potential to increase revenue at firms. Certainly increasing revenue at Houseag. It's freaking skyrocketing revenue at Houseag. Dude, we just collected many months of rent in the form of AI revenues. And we're like, damn, that's pretty good. That's great for Houseag investors too. But anyway, 3 bits of evidence could give would-be adopters pause. First, evidence from public markets. Goldman Sachs produces an index of companies with the largest estimated potential change to baseline earnings. Let's see, whatever, I don't care. Uncertain. Second evidence. 45% reported returns from AI initiatives were below their expectations. Only 10% reported exceeding expectations. Whatever. Economic research, blah, blah, blah. All right. Whatever. I think the most interesting thing from this is just the stagnation a little bit here. This and the Stanford piece. Those are the most interesting components of that. All right, how's our 10-2 spread? Oh, damn! This is because of Japanese carry trade right here. That's a little pop there on the 10-2. Huh. Mm-hmm. All right. All right, so let's see, what else do we have here? Health deals, France, blah, blah, blah. Can't pardon Putin. EU tells Trump, you can't pardon Putin for war crimes in Ukraine. Is that even being considered? Wow. I guess so. What is this? Trump's drive to secure peace must not let Putin off the hook for war crimes, a top EU official has said, effectively setting a new red line for the deal. Mm. Mm-hmm. Yeah. Well, I mean, I think that's fair. Honestly, I'm not interested enough to read the rest of this. Trump doesn't give a flying F what the Europeans are saying. Germany's far-right AfD attempts to rebrand. Oh! How are they going to rebrand? Oh, that's interesting. Here you've got, guy with shaved head. And then here you got the anti-Nazi slogan over here. So it's like you got a little bit of a, whatever. Leif Erik Holm. Are you kidding me? How cool. This is like Leif Erikson. Literally. Leif Erik. Okay, Holm, now 55, became the AfD party's top candidate, 38% support. This is the party that Elon shills for. Wedel, she's strong. She's gotten a lot, but she's not overall very liked. The average German, I think the majority, what did the AfD win? They won like 18% in Germany or something like that. So most people didn't vote for them, right? So, new look, new politics. AfD is growing early this year. What are they trying to do? Wedel is now trying to tamp down the extremism. Okay, yeah. I mean, that's what you have to do. Like, it's kind of like the AOC phenomenon, right? Like, you can't always have AOC policies like strong to one side and actually expect to, unify the country. And so I think that's the idea here is now that they've gotten some power, they've got to move a little bit more towards the middle. Okay, that makes sense. All right, whatever. What's over here? 4 dead in Russian attack as diplomatic efforts to end war continue. Yep. World War II toxic compound sprayed on Georgian protesters? Oh, that doesn't sound good. Georgian? No. Targeted with camite. Camite. What the hell is camite? Camite. Sweet potato? No, that's camote. Use of camite. Oh, here you go. Bromobenzyl cyanide. Oh, that sounds ouchies. So, what's bad about it? It doesn't sound good, but what does it do? Oh, reports suggest it causes health problems that last not longer than normal chemicals. Oh, okay. Got it. I mean, I don't want to get tear gassed at all. But I also don't go protest. Let's see here. Over 120,000 home cameras hacked in South Korea for sexploitation. Oh my lord. Isn't this what Jeffrey Epstein did? The freaking BBC. 120,000 South Korean cameras. That's kind of interesting. There we go. The Independent has it as well. The National Police, the footage was shared with the BBC. IP cameras by exploiting security weaknesses, including the use of simple passwords. Please, how did I click on that? Please change your password from admin and admin. Like, nobody actually resets these passwords, and then they're so easy to hack. So, all right, whatever. I mean, it's just a little lesson. Sexploitation. All right, what do we have over here? How are we doing on the Qs? Still holding on. Still holding on. That's nice. Yeah, I think we could still trend towards green today. Get back to 619 would be nice, just like we had on Friday. All right. Nothing over here at Al Jazeera. Reuters. Reuters. No. Boring, boring. Luigi. See, like, you had somebody here in the chat was like, oh, Tesla had great registrations in Italy. And then over here, it's like, Tesla new registrations plummet in key European markets. So it's like, well, which is it? Maybe it's both. Because you could cherry pick, like the Bulls are going to cherry pick the good numbers. The Bears will cherry pick the bad numbers. Whatever. It also sounds like they fixed the plane glitch on the A320s, which is nice. Software update's done. Not a pain in the ass to do that, but yeah. All right, let's see. Post-war, nope, nothing on Axios. Wow, kind of actually a boring day. What's the Post got? Post has Trump denied. Trump says Hegseth denied issuing order to kill boat crew. Whatever. Ozempic is changing how we spend money and time, plus what we eat. Well, I think that's partly why restaurant stocks have been a little oopsie-doopsie, but what do they mean spending money and time? There's a psychological shift. What? Okay. How's it changing? Obesity rates are down 3% from 40% in 2022 to 37%. That's great. Okay. Health food brands, fine. The side effects are starting to pop up. Indigestion, nausea, loss of hair, and muscle mass. Purchasers of pregnancy kits amongst GLP users surged 148%. Oh, so maybe it boosts fertility, or people are doing certain things more because they feel better about their bodies. Imagine that. Electrolyte supplements, grocery stores, food noise. GLP users reduced their spending by 10% in 100 categories, including groceries, restaurants, and tobacco. Wow. A 10% decline that's going to show up at Cheesecake Factory, not getting the Oreo cheesecake slice anymore. Man, that sounds good right now. Okay. What is this? They're focused on high protein items which support muscle mass. Oh, do you see Starbucks is doing the high protein thing now? I think Starbucks is trying to shill anything to keep their stock alive, because it's been stuck for a while over here. Stock. Okay. Interesting. Wow. More produce, really. Fresh fruit increased. And vegetables increased. Wow. That's great. That's so much healthier. Non-alcoholic beverages. GLP can suppress alcohol cravings. Wow. 14.5% less alcohol. Strip malls. Clothing brands. Yeah, sure. People need new clothing. Smaller sizes. Gyms. They're spending more on things like wearable electronics. Strength training. Travel. GLP-1 users may invest more in adventures outside. Let's see. 15% increase in body image. Well, duh. Complications. Cost prohibitive. Reaching as much as $6,000 a year, even at the discounted rate. Holy smokes. Wow. Okay, that's actually a really interesting Washington Post piece. This is like, sure, some foods might be down, but who would think that appetite for vegetables and fruits would be going up? I wouldn't have suspected that. I would have thought blanket everything down. But I guess that's why we read. All right, what else? So, let's see here. That was WAPO. The sexploitation thing. We looked at the 10-2. That was a little odd. Foreign affairs I'll look at later. It's too intense to do in a live stream. And by intense, I mean boring. Okay. I wonder what the institutions are up to today. We should probably go look. Let's see what the institutions are up to. All right, so Powell talking today is not important, no. Droppy. All right, let's go in here. Let's see. So T.S. Lombard, the Bank of Englandification of the Fed. That's an interesting one. Okay, we'll take a look at that. Let's see. Morgan Stanley. Humanoid tech grasping the future. What companies are saying? What Google selling TPUs means for Google. Well, let's find out. Let's go see, eh? All right, I'll pop these puppies up. Okay, we'll look at that. Goldman's got a lot today. Whirlpool, Black Friday pricing update. Oh, actually, I kind of want to see that. Because then we can see what they're doing with appliance sales. We looked at the manufacturing surveys. Those weren't great. The plot thickens. What's that about? Oh, that's overseas, Polish. Okay, cool. Let's take a look at this. One sec. And oh, quick shout out. I just saw Apex. Thanks for joining Reinvest AI. Lim, thanks for joining the Meet Kevin membership. Oh, Apex also bought the Meet Kevin membership. So followed the strategy. Meet Kevin membership, then Reinvest AI. Good for you. Welcome aboard. Sylvan just joined the Meet Kevin membership. Welcome aboard. William just joined Reinvest AI. Welcome aboard. All right. Thank you, by the way, for your confidence in the Meet Kevin products and my startup, Reinvest. House High. All right, so what do we have here? Promotional activity is consistent with 2025, in line with expectations. We scanned to assess competitive pricing. Results are consistent with recent holiday efforts to realize price offset by higher discounts, given weak demand. Net pricing was up 300 basis points year over year. That's a bit above inflation. Let's see. Promotions were led by discretionary products. Of course. All right, so that's not a big surprise. What do we have over here? Morgan Stanley, humanoid tech. Transitioning to physical intelligence marks a pivotal chapter in human history. The rate of change is incredible, favoring those best able to adapt. Well, that's why people are, yeeting into Tesla stock, because of the humanoid revolution. I don't know that they're going to be the ones to win the humanoid revolution, but, they're certainly the most. They're like the only one out of the Mag 7 outside of like Google, which is partnering with robotics companies. And I guess you could argue Amazon is like a robotic logistics company, right? Let's see here. Okay, what do we have here? Physical AI is closer to reality. Building on Morgan Stanley's global embodied AI theme, we size the opportunity within grasp, framing the world. Our in-depth analysis says there's a TAM of $305 billion by 2045, in line with reductions in costs for AI models, blah, blah, blah. Bill of materials will increase, brain vision sensing. Okay, whatever. Just give me the stocks, bro. Bear case and bull case. Visualization in progress. Okay. So I've got... Oh, robotics will be 40... That's their estimate. Wow. Robotics will be 49% of total addressable market for chips. By... This accounts for 49% of global semiconductor TAM of... Oh, relative to today's numbers in the future. Oh, okay. Well, that's a confusing number. I don't really like that. That's confusing. 4 to 6%. Okay, yeah, that's confusing. Confusing, misleading. They're comparing the then numbers to 2024. That's dumb. So I don't like that. All right. So where are the stonks? Let's see what stonks they like. All right, so here are the components, right? So actuators, these have major issues right now. Major issues on this side. There's no doubt about that. Major issues here. Issues in batteries for humanoids. Probably fewer issues over here. Although we've heard about Elon complain about the hands. Okay. So investing in humanoids. Initial wave of physical AI will be able to create entirely new robot species. Good lord. Highly efficient machines at warehouses, factories, farms, and other facilities to unleash productivity. Somebody's been drinking too much Elon juice here. Let's see here. AI vision. They cannot be done on a CPU or GPU. Companies offering high-resolution camera solutions. Cutting-edge digital image processing chip providers. Brain technology. GPUs or ASICs. Okay. Sensing technology. Investment implications. US semis. All right. So our analysts emphasize that investors should think beyond robot manufacturers, so like beyond Tesla, and focus on fundamental component suppliers that'll scale. Okay. So they say NVIDIA, AMD, and Ambarella. Who the hell is Ambarella? As well as onsemi, NXP, Texas Instruments, and Microchip. Okay. Then you have European tech, like ST Microelectronics and Melexis. Japanese tech. Then you've got Samsung, Sony, Renesas, whatever. Here's some Chinese ones. BYD for China. Okay. Let's see here. All right. So here's some brands. That's cute. Infineon. All right. So brain, AI vision, and sensing. That's kind of cute how they break this down. Yeah, you can kind of sort by like PE ratio or market cap. That's nice. Moore's law, reliable scaling. Not all tech is created equally. Bill of materials. Here are like the sensors and stuff. I mean, that's cute. Not bad. Good job, Morgan Stanley. I'll read more of that later. But for now, we're going to look at what Mike Wilson is complaining about. What are companies saying? Mentions of raised guidance spiked while cautiousness fell. Well, that's bullish. We forecast 17% EPS growth in 2026. That's great. Average company sees meaningful earnings for the first time in 4 years. That'd be great. AI adoption is key. Okay. Free cash flow boost from the One Big Beautiful Bill. Okay. AI mentions. Tariff mitigation. That's fine. Inflation mentions were steady. And then you just kind of get into the frequency of measures. So this is a nice little summary here. Initial boost to free cash flows thanks to the One Big Beautiful Bill, R&D and expensing, and bonus depreciation. Which reminds me. Where I gotta write something down. Tax. That is gonna be the R&D. Cool. All right, what else? Google. Reports indicate Google could start selling TPUs to external data centers. What happened? We know what happened. Oh my God! Did they listen? Dude, did they watch a Meet Kevin video? Bro, what did I say? Google's TPU sales could do for Google. You gotta be shitting me, dude. The day this TPU crap was announced, the day this was announced, TPU, Google, I said, market already fully pricing in the 3% gain to EPS. And here it is, a week later, Morgan Stanley copies Kevin's analysis. Not patting myself on the back at all. That's hilarious, dude. All right. So the Qs could just go positive. Let's see. Oh, let's go.
Gain the lead.
Let's go, dude. Alpha report nails it again. This morning says buy the dip after the 15 minutes of vol. Let's freaking go. That's great. Meta's not joining the party. It's trying to. That's great. Oh, yeah, even Tesla's green here. Look at that. Trying to get back to 433. That's fantastic. Okay, so TPU pricings. Blah, blah, blah. Okay, whatever. We got their bottom line. All right, what's this Dario Perkins beavification? Ah, boy. Get some more blueberries in here. Get that stem out of there. Fed communication has confused everyone. Uh-huh. All right, so confusion. Right, because they rug pulled it, afar from, and then all of a sudden something changed, even with no new data, whatever. Jerome Powell has lost control of the Fed. Wow, they're calling him a lame duck, and his colleagues have gone rogue. Wow. Okay. Let's see here. This is the real cunning to preserve the Fed's independence after he's gone. Oh, by diluting his own role on the FOMC today. He's also curbing the power of his successor. Oh, that's like 4D chess right there. If this is true, this is 4D chess. Huh. I've had so many blueberries now. I probably had like 2 pounds of blueberries. Yeah, maybe not that many. Maybe a pound. Anyway. Somebody told me blueberries are good for you. Bernanke and Yellen pushed the FOMC, blah, blah, blah. Number of Fed dissenters, blah, blah, blah. Okay. I get it. It's an interesting idea. It's not actually a terrible idea. All right. All right, what else? Fed, let's see here. Fed. So, let's see. We know Powell's got the Q&A coming up. Today is the calendar here. Powell's at 5 o'clock. I mean, so I'll go live for it. Brief remarks with panel discussion. And Condoleezza Rice is going to be there? Dude, I haven't heard of Condoleezza Rice since, like, George Bush days. My God. Condoleezza Rice. Yeah, that's exactly it was George Bush. Condoleezza Rice. Secretary of State under Bush. Condoleezza. Could you imagine being a kid and you're in like 4th grade and the teacher's like, all right, everybody introduce yourselves. And it's like, I'm Condoleezza. What? All the other kids just lose it. Anyway. Why is she going to be there? Whatever. I'm not going to question it. I don't care. All right. So, politics are 100% cooked. How? How are they cooked?
This has been a pretty big video. Things have been getting pretty...
Hold on. Let's pop this up.
Really, they're quite extreme.
Ladies and gentlemen, I am here to inform you that the rumors are indeed true. The Democrats have struck back. In the New Jersey governor's race,
I think.
Is this a sign?
I can never bring myself to watch this stuff. Like, I click on it, and I can last about 10 seconds. Which is longer than usual, by the way. But I can't watch it. Some of it is just so boring to me. This politics stuff. All right, what else? Let's see here. GOP, no. Asymmetry, AI generated song, tops Christian charts. Lutnick touts Trump tariffs. Okay. Boring. Asylum freeze could last a long time. Fine. Okay, let's see if the Doomers have anything. Drama slop. Yeah, honestly, that's a great way to put it. All right, so let's go to Bloomberg. All right, let's see if they've got anything for us. Doomers. Steve Cohen, Casino in Queens. Good for you. Lily, NVIDIA, we saw this. Blah, blah, blah. Santa Rally is wobbling. Ah, shut up. It's fine. Okay. Bro, what is going on here? There's nothing. All right, well, we can do it. We could summarize all this stuff. I think it'd be most interesting. Oh, and we never looked at the Sailor article. Let's look at that. Let's see. Let's go here to the Sailor piece. All right, so here's the strategy tumbled after a Bitcoin champion launched a dollar reserve to fund its dividend and warned it could incur a $5.5 billion loss if the price of cryptocurrency doesn't rebound. I think it's actually more than that, but let me see. Open recent. Bitcoin losses to Gap. Okay, who remembers this? I estimated at 2.8 billion. And what did they say? Oh, it was like 5, dude. Oh, because of the dividends, baby. 5. That's more than I even estimated. Wow, that's big. Because of the dividends. Wow. And probably they must have bought high. Wow. Oh, did MicroStrategy fall even more? How are they doing today? Qs. Oh, Qs. That's all right. You're still on the uptrend, even though you technically went red here. Let's see what's going on. MS Tizzle. Damn! Another 10%. Holy smokes, dude. Well, they got to try to prop up the Ponzi scheme Stretch. You know, I'm very bearish. Stretch. I think Stretch will go bankrupt. The fund will close. And it's just going to, like, strategy is going to keep tanking until they get rid of that crap. I'm not very bullish strategy myself either. Man, I hate the mushy blueberries. Nasty. I'll throw that puppy away. They gotta be crunchy. You know, if there's no crunch, it's not good. Alright. So, yeah. Just, there's not a lot in the way of news. The story of the world's greatest economy. Is this a book? Or is this an ad? What the heck is this? I'll look at that later. This is a fancy cover, though. Look at that. I got a whole section over here. Whoever bought that out, or whatever this is. Take a peek at that later. Alright. So, let's summarize all this crap. And then I got some work to do. And then we'll get to Powie Wowie later. At 5. So we'll talk about Powie Wowie at 5. We are going to talk about the 10-2 pop off a little bit. We'll talk about, let's see here. What do we have here? We're talking about Bitcoin. Oh, we got to talk about the ISMs. Right. Because that was a problem. So we'll talk about the ISMs. Then we'll look at... We got some OpenAI, circular stuff, private credit. We talked about the Economist article about the jobs, AI adoption. That could be after the circular AI stuff. The 10-2, we talked about that. Amazon's AI news. Okay, fine. It's boring, but whatever. And then we talked about Ozempic. That was kind of like a fun little endpoint. That's fine. And then, of course, we have these institutional pieces. So it says, what will happen to the SMST ETF that shorts MSTR if MSTR gets delisted or bankrupt? Typically, it depends how they're shorting, but typically, they will have a very nice profit. And then if MSTR, let's say, gets delisted, they would have to just close their ETF, their short ETF, but they would pay out profits, right? Like an ETF closing, this doesn't really matter. You just get your money back, you know? Like, that's not a big deal. So, okay. Good. Okay. And let me make sure we've got this all cooking and ready. ISM, S&P. Okay. All right, and then Powell at 5. I gotta keep all this crap straight, but we'll do a summary for y'all. Yeah, Powell speaks today, but it's gonna be bullcrap. Like, I'll cover it, okay? But I'm telling you, I think it's gonna be bullcrap. Like, I love nothing more than Powell talking to pitch my Cyber Monday coupon code, okay? Like, seriously. Powell going live tonight at 5 p.m. for a Q&A that's going to be full bullshit is, like, the best thing I could possibly ask for on coupon code expiration day. Like, I didn't know this was coming. It's just Cyber Monday. But I'm like, damn, this is fantastic. I would love to stream Powell at 5 p.m. So I need to be grateful. But nothing's gonna happen. I'm just being honest with you. You're in blackout window. And you can be like, oh, you know, there's so much integrity in the system. We've done so well. It's just gonna be bullcrap. He's not gonna resign. Stop it. Don't even say that. Somebody says, yeah. Sailor liquidation is the bottom, I agree. Somebody else says, can you talk about the Alpha report for a moment? You know. And talk about the Alpha report like every day. Oh, it's my top 10 stocks to buy for the next 10 years. What I'm buying, at least. It's not personalized advice. The sort of daily trajectories and catalysts I'm paying attention to and strategies for the day. Like this morning, it was after 15 minutes of vol dip, we're probably going up. And we're, bullish through December 9th. I'm just being transparent about it. All right. Let's do a summary. We got more bad news this morning, but this bad news could just be a speed bump on the road to new all-time highs. We're going to talk about that bad news, both the ISMs, what's going on in the S&P manufacturing numbers, what's going on with not only the Federal Reserve, hint, Powell speaks later today, and then, of course, what's going on with AI, private credit, the labor market, and updates, at least in terms of potentially where to invest in this crazy world. So with that, let's get started. It is Cyber Monday, so remember, at meetkevin.com, we've got an expiring coupon code tonight at 11:59 p.m. for the Alpha Report, and of course, the Reinvest AI over at househack.com or reinvest.co. So what did we get this morning? Well, we got some reports that just weren't that delicious. The bottom line here is S&P Global U.S. Manufacturing PMI. I call it not great, not terrible. Just like the Chernobyl, what is it, the Netflix or who, I can't even remember, HBO series, whatever it is, watch it. It's amazing. Hashtag not sponsored. I don't even know what platform it's on. But anyway, record rise in warehouse stocks. This is probably because we've loaded up on tariffs, okay? That's one of the reasons GDP has been booming. We wanted to load up on inventory before tariffs. It led to a manufacturing recovery, which is great. And it led to employment growth in manufacturing, which that's fantastic. But the problem is the future signal is weak. Warehouses have filled unsold stock to a degree not seen since 2007. That's bad. And the manufacturing is giving potentially worrying signals that we have a lack of new order inflows, which have, quote, slowed sharply, and suggest that a market weakening of demand growth is coming. So in other words, if new orders fall off a cliff, it's really bad for GDP contributing manufacturers. Why would new orders fall off a cliff? Because I think we're going through a lull period. So you get the tariff fear, and then everybody wants to boom, 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 buy, okay? Now you've stocked all your shelves, and then you go through a lull period as companies start testing and passing through, price increases. And then you can kind of get back to normal manufacturing. So I don't necessarily think that this dip right here is anything too concerning. Of course, it could boil over if private credit issues get worse or there's some kind of bubble catalyst. But this isn't necessary. This is like, you would expect this after the tariff pull forward we had. Same thing over here at ISMs. We are basically paying for the inventory buildup. The GDP pump was a bit fake as companies built up stock to get ahead of most tariff pass-through. Those were my notes over here. But same thing over here, a decline in new orders compared to October. Manufacturing activity contracted at a faster rate with pullbacks in supplier deliveries, new orders, and employment. The difference between these two reports is that the ISM indicated declining employment and the S&P indicated rising employment. These are surveys of different companies, but both of them indicated the same decline in new orders. So yeah, it's a problem, but it's probably nothing more than a speed bump. It's sort of like the speed bump that the market kind of had this morning. So this morning in our Alpha Report, which is, everybody who's part of the Meet Kevin membership gets this all the time. Every day the market's open, we do this pretty much every day. This morning in the Alpha Report, we were turning red. We were down like 80 basis points, and I'm like, all right, here's the game plan for today. My expectation is, and you can go watch this, like this is a recorded video. I play this live with my course members, and the archive's been there since like 2018 or 17 of my live streams with course members. And so what do I go? I go, hey, I think the volatility index, the VIX on the Dow, is up 10%. I think it's going to drop throughout the day. As it drops, the Qs will rise. I wouldn't be surprised if we go green. A test is going to be 617, but we should be able to break through it just like we did last Friday when we ran to 619. However, wait the first 15 minutes. The first 15 minutes will probably see some algorithmic selling because the volatility index is up, which means you'll get some algo selling. And once that balances out, you should be able to move up. And look, folks, it's literally what happened. First 15 minutes, you get your algo sell. Now, all of a sudden, the volatility index comes from plus 10% all the way down to only up 2%, and the Qs are almost green. Easy game. Anyway, if you want those insights, make sure you're part of the Meet Kevin membership at meetkevin.com. You get those every day the market is open. Now, what do we know about, not only, these ISMs and PMIs not necessarily mattering so heavily, what do we know about what else is going on? Well, we know that Jay Powell is talking today, but don't expect much out of Jay Powell. I'm going to talk about this in just a moment, the Ozempic piece. We'll talk about that towards the end. Don't expect much from the Federal Reserve. So here it is. Jerome Powell will be speaking at 8 p.m. Eastern, and he's going to give some brief remarks, and then he'll have a panel discussion. This is very unusual during a Fed blackout window. The Fed had time after 2 weeks ago we got those terrible ADP numbers. The Fed had time to talk up the odds of a rate cut, and they did exactly that. Waller and Mary Daly basically came out and said, hey, we're going to get a rate cut in December. But it's probably going to be a hawkish cut. So we'll get our 25 cut, and unfortunately, then we're going to have to deal with hawkish commentary from Powell on the 10th. And we're also going to get ADP numbers over the next couple days. So, keep that in mind as well. That'll be a fun catalyst. But anyway, we're pretty much certain to get our rate cut for December 10th. I don't think we're going to get any commentary at 5 o'clock today from Jerome Powell. So while I will live stream it, I wouldn't hold my breath that anything entertaining is going to happen here other than Kevin pitching his expiring coupon code tonight, because there's going to be a massive price increase. So you'll certainly get that. That I can guarantee you. Comments on economic or monetary policy, I don't actually think you're going to get. I mean, Condoleezza Rice is going to be there. So, make what you will of that. With that said, there was a spike in the 10-2 curve today. This is likely because of the Japanese carry trade concerns, given that the Bank of Japan is likely to hike. Watch my Japanese carry trade video for a more detailed breakdown on exactly this. But this is likely just a reaction to the Japanese carry trade issue. That's why we saw volatility pop this morning, and that's why we had that 15-minute sell-off. It's honestly, it's a buy the dip. I even wrote that. I mean, you could see it on my bear bull scale this morning. On my bear bull scale this morning, I put myself at a 5, and I said the carry trade fears are not economic to us. Short-term vol, yes, usually buy the dip opportunity. That's just from our little course member buy the dip chart, so we can, or bull bear scale, bear bull scale, so we can keep track of what level we're at over time and see the change over time. But this is why you're going to see these headlines like U.S. factory activity shrinks by the most in 4 months. What matters more is obviously the labor market, and I actually really like this Economist piece from about the labor market. They're not wrong to say that there are positive things in the labor market. Like, yes, there are also concerning things, 27 weeks unemployed, and then things that they reference, such as unemployment slowly creeping up, though it's historically low. Firms are laying off people, but again, it's going to take months for that to show up in layoffs and actual data, and by then hopefully we soft land. They talk about the SOM rule hasn't triggered yet, which is also good, which means the pace or the rate at which, the rate of change, sort of the first derivative, the speed at which jobless claims are going up or the unemployment rate is going up is actually relatively slow, so this is sustainable. And this could actually set us up for a good 2026, where maybe we just have a year of calm and clarity, they say. So The Economist was actually pretty positive on the labor market, which is great. Obviously, people are really worried about artificial intelligence, NVIDIA, and the circular nature of everything. NVIDIA threw $2 billion into Synopsys, whatever, this morning. We did a fundamental analysis this morning on the company. I don't know. I wouldn't call it like mega impressive. You've got some PP issues over there, pricing power issues at Synopsys. Honestly, somebody donated $20 on my live stream and asked me to look at UiPath. Dude, what we saw there was fire. Thank you for the $20 donation. I know it's probably for $20. This guy's gotten a lot of shout outs, but it was good. I really like that. But anyway, and then of course, at the same time, you have OpenAI taking a stake in Thrive Holdings, which is interesting because Thrive Holdings originally invested like $500 billion into OpenAI. So now it's like you give me $20, I'll give you $20. It's like, what the hell is going on here? So it's gotten so confusing and convoluted, and Thrive Holdings is like operated by, or Thrive Capital, can't even keep them all straight, is run by Josh Kushner, who's the 4-year younger brother of Jared Kushner, and it's like, this is probably all just in an effort to get into the good graces of people close to Trump. I don't know. It's really confusing and very circular, but that doesn't stop Morgan Stanley from really shilling the idea that humanoid robots are going to take over and you should invest in humanoid robots. They have what I think is a little bit of a confusing and misleading chart, but they're really bullish on the whole humanoid story. And what they recommend is that you invest in the whole supply chain stack of chips, basically. So in the United States, NVIDIA, AMD, Ambarella, onsemi, NXP, Texas Instruments, Microchip, Sony for Japan, Samsung, South Korea, BYD, China, and many others. You could just look here. Here's sort of the stack. But they are like jumping up and down about this whole humanoid, push, that they're calling it a humanoid species coming to farm work and to factory work and all the stuff we don't really want to do, right? And they're probably not wrong as long as humanoids can solve their sensor issues, the hand issues that Elon Musk complains about. And then also, let me pull it up here, what I wrote down, the actuator and joint issues. So I wrote major issues here, the reducers, the motors, the sensors, issues in power management, right? The batteries aren't strong enough yet, the hands. Like, there's a lot to be done here. And so they're arguing invest in the whole supply chain stack, basically. That's kind of an interesting piece from Morgan Stanley. You also have a note from Morgan Stanley and Mike Wilson suggesting that mentions of raised guidance spiked while mentions of cautious fell. And they're forecasting a 17% EPS growth in 2026 as the average company could see its first meaningful earnings growth for the first time in 4 years. I mean, it wouldn't really, I wouldn't put it past our stock market to see this, mostly because, I just try to put myself in the shoes of a sort of a reporting company out there. And I look at our HouseHack AI, and our HouseHack AI is ROI positive. Already. Shout out to all those of you who've been joining it over at househack.com or reinvest.co, same thing. But y'all are signing up for the Meet Kevin membership and the Reinvest AI. Reinvest AI is probably selling 7-to-1 right now. And it's amazing because it shows people want to invest in AI technology. So, the boom is going. Are there problems? Sure. Amazon's going to do their Amazon reInvent conference in Vegas this week. They're going to pitch all their stuff. Of course, the information is kind of dumping on them, saying their product hasn't actually been the best. And then, of course, the Census Bureau says there's been sort of a lag in adoption for artificial intelligence. But that's still leading to, which I thought was a decent article with the exception of them not listing the entire list of names. But the Financial Times had an op-ed that they published here where they talk about how certain quality names have gotten pretty cheap. I actually think Meta has gotten exceptionally cheap. It's trading for a 1.2 peg. Everybody in the comments here was pretty pissed that they didn't actually include the list, but somebody looked up the iShares quality ETF, and you could look at the holdings for that, wherever it was. It is, I think it's, I can't find it. But anyway, it's basically names like Meta and Google and NVIDIA, just the high quality names in America, and how there's an opportunity that's coming to those because their price to earnings ratios aren't actually that expensive. Frankly, at a fair valuation, you could easily justify NVIDIA with these growth rates at $300. Now, I'm not saying it's going to go to $300 in the near term. I'm just saying you could easily justify a way higher price. You could easily justify over $1,000 for Meta shares. Easy. You could easily justify $1,370-ish bucks. I guess that'd be $137 now for Netflix. Pretty easy to justify. There's definitely some upside. But, on the flip side, you can't for Tesla. Like Tesla or Palantir, these have run a little too much. But we already know that. So, somewhat interesting. And then, of course, at the same time, you've got Michael Saylor, who has to do everything he can to sort of prop up his Ponzi. I hate to say it, but that's all this whole Stretch thing is. See, now, in order to fund Stretch and some of these other preferreds, which are really dangerous, by the way, they could stop paying dividends on these, and I expect that they'll collapse. I really need to make a whole independent video on those because if you go through the disclosures on Stretch, for example, it's got screaming red flags all over it. We already went through it in the Meet Kevin membership, but I'll eventually make a public video on it. But anyway, so now they're announcing a USD reserve. It's basically a way of saying, hey, we're going to leave $1.4 billion in the bank to pay dividends. This really shouldn't be called a USD reserve. It should really be called a dividend fund for debt obligations because they have committed to make these distributions to these different funds and they need the cash to be able to do that. Unfortunately, that means they have to issue more MicroStrategy stock, and so of course, MicroStrategy is tanking to try to prop up these funds that are trying to extract capital out of, innocent retail investors. So it's going to be really interesting. I maintain that I'm not bearish Bitcoin. I am bearish Ponzi. And I maintain that MicroStrategy and all these feeder funds imploding will mark the bottom of Bitcoin pricing for a generation. So there will be a generational buying opportunity when this finally implodes. Michael Saylor is under the impression that he can essentially dilute this stock to zero and that he'll always be able to issue new stock. The part that he forgets is as the share price comes down, every time he issues a new share, he gets fewer and fewer US dollars. And he needs those to pay out US dollar denominated dividends. Otherwise, he's not fulfilling the promise of like his Stretch fund. And if Stretch collapses, it's going to be a big black eye to him and MicroStrategy. And the liabilities that come out of this are going to be massive. But, nobody wants to talk about that right now. So, yeah, I'm pretty bearish on those. But anyway, that really kind of covers things today. Again, expiring coupon code at meetkevin.com and househack.com or reinvest.co. A trick that people are doing is they're buying the Meet Kevin membership, and then they're looking at the last alpha report, which has a coupon code where you can bundle up. But anyway, this was also very interesting. We looked at how Ozempic is changing the way we spend money. And some of the things are obvious, like smaller clothes, so good for clothing brands, bad for food. 10% fewer expenses expected at groceries from GLP-1 users. But there were some really interesting side effects as well. Apparently, they think fertility rates are going up, with pregnancy test kit usage up 148% within the course of a year of using GLPs. That was interesting. I mean, maybe because people look better. Supplements going up. 10% declines in groceries, quick service restaurants, and tobacco. But a 14% increase in vegetables and fresh fruit, and 38% in vegetables. That was surprising that, the health foods are actually going up for fruits and vegetables. And sales of chips, baked goods, and packaged cookies fell 6.7 to 11%. For people on the medication, so snack foods down. Alcohol down because of GLPs, down 14.5%. And then, of course, maybe also an opportunity for gyms because there's muscle mass loss associated with GLPs. So wearable electronics, wearables, Oura rings, whatever, Apple Watches, and then, of course, travel because maybe people feel better about themselves or whatever. I mean, these are sort of the logical outcomes here. So that's sort of like a broad roundup of all of the entertainment today. I don't think we've really missed anything. Oh, the one thing that we missed that was crazy was, you might remember, and this is what we'll call this the humble Meet Kevin part. Okay, you might remember a few weeks ago when Google announced the TPU partnership. Or not partnership, it was actually technically a buying partnership for others to buy TPUs, like Meta to buy Google TPUs. I said that I think the impact to Google's bottom line will be 3%. Well, it turns out that Morgan Stanley now has a piece out that the upside would be 3% to 2027 earnings per share. And I'm like, oh my gosh, that's exactly what we said. So I thought that was kind of cool. So I'm definitely patting myself on the back for that one because my analysis was done same day. And we're just now hearing this from Morgan Stanley. And they came up with the same conclusion. It just makes me feel a little better. But then again, we do fundamental analysis every freaking day. Like, I better not be that far off, Like, what's the point of doing analysis every single day, You're supposed to get better and better over time. So I think we're doing good. Shout out to everybody, obviously, in the courses who get the stock tab. You get our archive of fundamental analysis there. But anyway, Qs just continue holding on. This is exactly what we expected in the alpha report. And it makes sense. Like, for you, even if you're not part of it, it is something that you would expect to continue through December 9th. And don't expect anything really much out of Powell tonight, but I'll be there to cover it live. Cool. There you have it. All right, folks. We'll see you later. Goodbye and good luck.